Oh, thank you. And obviously great to be here. So my name's Alex Curran. I'm the CEO of Aptitude Software. So I've spent pretty much the last 20, 25 years working with CFOs across banking, insurance, telcos, tech, and other industries, helping them solve some of their most complex finance and accounting challenges. So yeah, thank you for inviting me today.
Well, great. So you've spent 20 plus years working with finance. What patterns are you seeing that maybe they should start to take better notice of?
I would say there is growing frustration. I think that's how I would frame some of the discussions that I've been having. And I would say that some of the frustrations that we're talking to our prospects about is, I would say, the same and very, very similar. So, what we're seeing with our industries or the industries that we're working with is that finance teams are under pressure to deliver, I would say, kind of real time information at the fingertips of the CFO, for the CEO, for them to be able to kind of drive increased revenue, make sure that obviously they're compliant as and when they do that, and to obviously unearth any information about any risk so they can pounce on it. At the same time, obviously being asked what AI returns can they actually get and what's the value of AI and can they demonstrate that value, but they're being asked to do all of this while still running on, the architecture which we believe is built for a different era.
So, what I think I'm hearing you say is that the speed of which we're supposed to be working as finance, or maybe even the role of finance is completely changing, right? To start going and looking more forward and helping to run the company. Is that kind of the vibe? Are you seeing a shift there of what's happening?
Yeah, exactly that. So I think, historically, right, you've seen the CFO be, the steward of the information. They have been responsible for closing the books and making obviously sure that the accounting is accurate and correct and that the numbers are ready at month end to then be consumed. What I mean by that is that what we're seeing is that the role of the CFO is changing, or the CFO's under pressure to essentially be the co-pilot to their business. So, as I said, right, to have information at their fingertips to be able to provide it to their marketing team so their marketing team can access it and look at how potentially they can launch new promotional activity to their customers within minutes, within hours, versus what currently takes most organizations months to support. And then that information again, like being used for their risk team, their FP&A teams. So we are seeing the role of the CFO become a more commercial role, and also I would say where organizations have been able to achieve having that data available, they're actually transforming, I would say, the teams around them to be less number of accountants and actually enabling those accountants that they've hired to actually be those data scientists that perform the analysis over the information that they have to be able to better serve the business in line with its performance.
So it's almost like the CFO role has turned 180 degrees. Historically, they've kind of been looking rear mirror, like this is what happened last month or last quarter, right? And now it feels like we're seeing a shift where now it's like, no, your role is to still do that, but now you have to be helping lead us forward. Do you think that's a true statement?
Yep, absolutely. When I think about and look at, I would say, a CFO value chain, I would say organizations at the moment, you have the kind of the front end source system. So if you're an insurance company, lots of policy admin systems. If you're a telco, lots of billing systems. They then have lots of individuals, teams kind of manually reconciling, mapping charts of accounts, stitching information together to essentially get to that starting point. And then they process that information through kind of a mismatch of kind of access databases, more Excel spreadsheets, and then post the results of all of that processing up to the GL. And then obviously via the presentation layer, which is a set of BI dashboards. But by the time all of that activity has happened, what we're seeing is that activity taking literally weeks. I think lucky if people can do it in days, but typically weeks. And then to your point, the information that the CFO then has to then run their business is then weeks old and out of date, and therefore they can only work on backward looking information. What we're seeing is a pressure for CFOs to transform that infrastructure and architecture to implement a different type of solution that provides them with that real time intelligence that then they can obviously utilize AI on top of to be much more forward looking. And I would say that pressure that we're seeing is not just specific to one sector or one region. We're seeing all CFOs across sectors, across all regions that we work within, under pressure to be that co-pilot to their business and have that forward-looking information.
What we're seeing a lot also is the change of the economy, the global, politics. Everything is almost like amplifying. I don't know about you, but I feel like everything's like 10xing what it was before, the speed. And so making those decisions on old data, I won't say bad data necessarily, but old data isn't serving them. Now, there's some out there that will say, oh, well, you just throw AI on top of that. Do you think that works? Is there a problem with just throwing AI on that?
Yes. And we hear that a lot across our customer base and also the big four partners that we work with as well. And I would say, though, to caveat, right, it's not that the AI is the issue. I think the AI technologies, the models out there are absolutely extraordinary. I think the challenge that organizations have to be able to get AI effective or be able to use it in an effective way is challenged by the fact that actually what's wrong is what's underneath them. And I think, we've done some analysis and launched a couple of surveys. And I think in one of the surveys that we ran, a bunch of CFOs came back and said that I think it was 87% of them said that AI is absolutely critical to their finance operations, but only I think 14% of them could actually point to measurable returns. And I would say that that gap isn't by accident. Finance teams are running AI on, unfortunately, data that was absolutely never designed to support it, right? Batched, aggregated, days old. And by the time it arrives, people can't really get effective use out of it. And then I would also say, in addition to that, absolutely, I think finance teams are in a unique position. I think, with other functions, you can ask AI a question, you get an answer, and you don't actually have to kind of prove that that answer is absolutely accurate, like 100%. In finance, AI doesn't just need to produce that answer, it absolutely needs to produce a provable answer. So, one that you can sign off, explain to your board, defend to an auditor. So, if the data underneath it isn't real time, traceable, and governed, again, the output isn't trustworthy. So, yeah, I think lots of pressure, but ultimately, I don't think it's an AI challenge, it's an architecture and data challenge for these finance teams.
So one of the things I've been coaching my clients on is that AI is an accelerant, right? It gets you kind of where you are faster, where you're going faster, but it also highlights your gaps or your challenges faster, right? So what I think I'm hearing you say is if you put AI on bad architecture, that you're probably going to get a little chaos faster. Would you agree?
Yeah, chaos. I think you will run a series of pilots, projects, and I think that being able to prove what the value is on, if you're using it on aggregated information, but that's, weeks old, I think will be quite challenging. And actually what we're seeing organizations do is actually look for AI native solutions that are able to come in, provide them with that right architecture, provide them with that real time information in a controlled and auditable way. And then once they've fixed the foundation, then start to utilize AI on top of it. But actually not invest in AI, not spend a penny on AI until that foundation is right, because I think it's a waste of cash and time and energy.
You mentioned the term AI native. Just for those that are a little late in getting into this AI revolution, right? Can you help describe what technology that's AI native means compared to just AI?
I see it technologies kind of sitting in two camps. So you have technologies or product solutions that organizations can use where they have AI embedded, and then you have technology solutions products that organizations can use that are AI native. So the difference between the two is that if you have a product that is AI embedded, has AI embedded into it, it's essentially exactly that, right? An organization, that software vendor, has gone out, acquired an AI technology, and inserted it and embedded it in its product. But when you go live with that product, that technology is there and will probably be there for the foreseeable future. And we've all seen the SaaS apocalypse, right, over the last couple of months. And you can see everyone's seen how quickly AI technologies evolve, and therefore organizations that we talk to are actually moving away from those types of products because they're concerned that if, for example, they go live with that particular vendor in a year, maybe less, I'm being kind, that technology will actually be Jurassic. So actually what we're finding are finance teams and IT teams actually look for technology solutions that are AI native. And what I mean by that is those products can be used and can work in conjunction with any AI technology of choice. So you've got that optionality, that flexibility. You can swap in, swap out, and then you can also, as an organization, move in line with the trends and obviously the new solutions that appear on the market. So that's how I view AI embedded solutions and AI native solutions.
In my mind, I'm a very image person. I keep having this picture of my house. So in Tampa, my home is over 100 years old. And when I tried to add some technology to it, right? It was like impossible because it had the plaster walls and like Wi-Fi signals couldn't go through it. Like every time we try and make an upgrade to our house because it wasn't native for technology, right? We're running into these huge obstacles. I mean, recently we had to put extra supports under our house, right?
Yep.
Using this same kind of house analogy, are you saying that people have to like rebuild their house with technology, or do we need all new ERP systems? Like, I get that we're living in this world of kind of outdated architecture. What can we do that isn't like going to take us years to do it?
Great question. So I would say those traditional ERPs were phenomenal, right? An organization could go out, they had three choices, they could pick one, and they could flow everything through it. So everything operational, everything finance, and that would support their business. But obviously, we've just talked about the fact that, those architectures are not designed for the AI era. So actually what we're seeing in the ERP market is the ERP split into two. Typically, right, as I've just said, you have operational components, so supply chain, HR, procurement in your ERP, and then you have your financial components, so your GL, your accounting engine, your subledger, your AR, AP. And actually, what we're seeing in the market is those two components split into two. And on the right hand side, where you have the finance components and modules, what we're seeing form is a new category called finance ERP. And that's where you have a solution with an accounting engine, a subledger, a general ledger, a fixed assets engine, and also a RevRec component. And that sits in your existing architecture and will connect with your preferred AR, AP product, or your treasury, or your cash management or tax system. And therefore, you are implementing a subset of what is required, but that subset essentially ends up being the nervous system and the brain of your organization because it holds vast quantities of books, records, quality information, generating and supporting a real-time P&L. And these products, because they're AI native, can be delivered in weeks or a handful of months versus these kind of elongated 2-3 year projects that typically cost tens, if not hundreds of millions of dollars a year. So it's not a complete rip and replace. You can actually implement your AI finance grade accounting foundation in a short amount of space. And also, obviously, as I said, right, connect to some of your existing systems as well.
So that's great news. I don't have to rip and replace. I can almost like augment with
Yep.
a native AI tool that will let me close faster and be able to start looking forward, because I do hear from a lot of clients. They're like, Heather, I'd love to do AI and do all this stuff, but we're barely making it with all these manual processes and connections. So you're going to solve that. How does the client know that they have a problem? Like if I'm a company and I know that I'm at my wit's end, right? Like,
Yep.
what are the warning signs that I would see?
So, in terms of, I guess, understanding if they are ready for AI to kind of be utilized effectively within their infrastructure and architecture, we talk a lot to our prospects and customers about what good looks like. And I always bring it back down to five things. And I use an acronym called SCALE. For an organization to work out whether or not they're ready or if they have a problem, I would say that using that acronym to assess their readiness is key core fundamental. So that acronym means, so if you take the S, it means that the first question that we ask our clients is, do you guys have structured real-time information? So transaction level as events happen, not last night's batch. So that would be the first question as part of scale. C is the second. So are they also able to support continuous operations? So reconciliations, controls, running in the background all the time. Again, right, not crammed into month end. And then the third, which is A, is auditability, right? Is every number that they have traceable back to where it's come from, on demand, in finance? Because if you can't explain a number, right, you can't use it. And then L is for layered controls, obviously governance, key core fundamental. And you've got to have governance built into the architecture itself, again, not added on top or afterwards. And then the final one is E, which is explainability, right? Same inputs, same outputs every time is non-negotiable. And when you're signing off AI driven decisions to a board or regulator, you absolutely need to be super confident that everything is explainable, auditable, and provable. And I would say the most finance functions that we talk to today, they might be able to say yes to one or two of those, but they can't say yes to basically all five. And it's all five that you need to make sure that you don't have a problem and that you can actually effectively support AI.
As I talk to companies of all shapes and sizes, I think the one letter in there that's really jumping out at me that I literally scribbled and underlined was the E, the
Yep.
explainability, right? I think if you even just started there and said, "Can you explain this number?" If the board called you up and said, "I need this like right away," and you can't do it, I mean, nobody likes to be on the hot seat, right? So, is there a question maybe that you can frame for us of your scale? Like, if they give 'em one question, what should they ask themselves to start this journey? To be like, "Oh, I have a problem."
Yeah, definitely all of those five questions. But I think number one question would be right now, do you have access to real time information? Do you have access to everything related to the performance of your business that you could trust within 30 seconds to a minute? And if they are not able to answer that question with a yes, then I would say, encourage them to look at AI native finance ERPs, because there are organizations out there that have asked that question and are in the process of implementing those solutions and will be able to have that information at their fingertips. And again, right, I'm not talking about organizations that are 100 million in revenue. They are also part of this and they are also doing it. I'm also talking about organizations that are 100 billion in revenue and have had obviously super complicated architectures to clean up and make sure that are ready to be able to respond. And I think the more organizations that do it will absolutely fly. And I think those that don't will really, really struggle to keep up with, market trends, any risk that pops up with any kind of geopolitical event that takes place, they just won't be able to respond at the pace that we're seeing others start to prepare to be able to do so.
When you asked that question, I was like literally thinking, I think 95% of the companies are going to be able to say, I'm not ready, right? I,
Yeah.
I don't know about you, but I don't know many CFOs that are like, I'm super confident in this.
No.
I have an executive coaching business, and what I constantly see is they feel like their voice isn't getting heard in the organization.
Yeah.
They're trying to make that shift from the CFO of yesteryear to the future looking CFO, and they're struggling to do it. And I think you have given us great clarity of maybe the problem isn't just plunking AI on top of it, but taking a pause and saying, let's go backwards and let's fix the foundational layer. And I absolutely love this because it just solves this problem, right? Of just putting too much through. We were just talking before we started about what's happening in Europe right now, right? And the heat wave. And I think there's some great analogies there with like the systems in Europe are not designed for, 120-degree days.
Exactly. I think that's a great analogy. And yeah, those, sorry to everyone listening who is in Europe, right, in the UK, because 38 degrees C in London or Paris cannot be fun, especially with broken aircon and broken elevators and everything that goes with it. But I agree, and it is a great analogy. And I think, the one that I'd also use internally when I talk about, some of the traditional systems is that I refer to them as kind of Victorian steam mills. Okay, fantastic for a specific era and phenomenal, right? They powered entire communities and economies. But, would you retrofit a Victorian steam mill, right, and spend that effort and energy in retrofitting it to support the AI era? You wouldn't, right? So there are a new next generation of solutions that are out there that can absolutely help and support and enable CFOs to be the co-pilots. And I think that's also a key core challenge, I think, for most CFOs out there at the moment. They are not aware that there is an alternative to the traditional solutions that they've obviously, spent a number of years relying on, and quite rightly so. There is a next generation. And I think if that next generation is explored, then I think they will very quickly see that there are organizations out there that are very, very capable of making, the nirvana, the vision that might seem unachievable at the moment, achievable.
Yeah, and I think there's a lot of people that look at their existing technologies, right? Like whatever ERP you're running. Oh, but they're saying they have AI in it. I'm good. I can check the box. We're doing AI. But are you doing it to the scale of what you need to grow your business based on your strategic goals, right? What you said is there's probably a lot of confusion with some vendors having that Victoria steam engine and saying, oh no, we retrofitted it. It's great. And when there is an alternative, and maybe you can share, you guys have a technology that allows you're calling it a finance ERP that allows you to decouple the pieces of your ERP. We're not getting rid of the whole ERP, right? We're just moving the pieces to be more effective. Maybe you can share with us, like, what does that look like?
Yeah, of course. So a finance ERP doesn't support kind of the operational components. It supports the finance accounting. It essentially kind of acts as that nervous system, that brain to an organization. So an organization will implement it. It has an accounting engine, subledger, general ledger, fixed assets engine, and rev rec engine. And then literally will connect to an organization's preferred tax engine, AR, AP, things that work very well, very effectively, but you don't rely on them to process vast quantities of information. We work with clients who need to process, 400 million journal lines over a 2-hour period, or another one does 150 million journal lines in an hour, and others might be less on, in terms of volume processing, but have that complexity. But what they want is to be able to hold and perform all of the accounting in one place. So they will implement a finance ERP essentially to hold vast quantities of books, records, quality information that is held and supports a real-time P&L. And that information is then used to feed AR, AP, and actually, in the case of FP&A, be able to feed FP&A with real-time information to support that. But what that composable architecture enables is that you don't have to do a massive rip and replace, but essentially what you're implementing is the foundation that feeds everything else. And we're proving in the market that we can do that in weeks, months, which in reality has historically taken organizations, if they've achieved it, which I would question, 3, 4, 5 years, hundreds of consultants, and obviously hundreds of millions of dollars.
So when I coach a lot of CFOs, one of the things I tell them in defining their growth of their organization is to literally start with the blank sheet of paper and say, like, if had to 10x my business, you could probably keep your existing structures and stuff if you just wanted to incrementally grow a little bit. But to 10x, you got to think completely differently. You have to think like what processes are just going to completely break. And I think what you're highlighting for me today is that the traditional ERP close process using the traditional tools is going to break on a 10x
Yes.
growth pattern. But you're giving us an option to say, okay, here's my 10x growth. And now I can have a finance tool to be able to get me there. So this is really designed for any high growth company, correct?
For me, it's any high growth company. So historically, organizations, if they are, 100 million to 200 million in revenue, would choose maybe a smaller ERP vendor. And then what we find is that once then that company gets to or grows to a bigger size, then has to swap out for another. What we're saying with some of the finance ERPs that are out there, if you're a $100 million organization, as an example, you can start with one of these finance ERPs and it will scale with you. And it will scale with you until you are 100 billion or whatever plus, and you therefore don't have to make that switch in and switch out. And then we're also starting with companies that are 60 billion in revenue, who are 100 billion in revenue, who again still want to achieve 10x. They want to dominate the market. They want to be the number one leader in what they specialize in. So I'd say it's crossing all types, flavors, shapes, and sizes of organizations that obviously want to be successful in effective use of AI and how they can then drive that business forward.
So this is going to be a little bit of an odd question. I was at the FEI Leadership Forum in San Antonio somewhat recently, and a CFO came up to me and he says, Heather, I get all this AI stuff, but I'm nearing retirement. This just seems like a lot of work. What would you say to those that are in that situation? Maybe their company is doing well, but not like blowing the roof off, and they're reluctant to plunge into an initiative like this. Like, what words of wisdom can you give them?
Look, I have a lot of sympathy for all CFOs who have gone through some form of kind of finance transformation or modernization program. I think, traditionally any finance modernization program is associated with big projects, complex projects, lots of people, vast quantities of cash investment behind it. Not all of them succeed. And even those that go live, right, go live, probably 5 years over the original timeline, have cost a fortune, and actually the business benefit that they're getting is in line or exactly the same with actually what they had before. So I can, sympathize with that concern because people have the scars. What I would say is that this approach to supporting that finance transformation to actually support and provide you with an AI platform that is capable of 10x in your business can genuinely be implemented in weeks or a handful of months. And we're proving that in the market with some of the largest, most complex organizations in the world, some of the most simple, some of the most high volume transaction orgs as well. So my words of wisdom is go out there, find those vendors, get them to prove to you what they can do and implement. Because before you retire, you could also be the CFO that, within the next 12 to 18 months has solved for AI, has provided that foundation, and is enabling that business to grow 20-30% year on year versus just the steady Eddie 5%. In addition to that, it's not just about growth, it's also about protecting your business for the future, because there are organizations, there are CFOs out there doing this. And once they are up and running, once they're live, once they're using it to drive core key business benefits for their org, they will fly. And others that don't will get left behind. And I think the time that people have is much shorter than I think people are fully aware.
What I'm interpreting is really this could define their legacy.
Absolutely.
If you're a CFO and you're kind of, nearing retirement, you're like, do I want to take the time to learn all this? What I'm hearing you say is that with the right technology, you could literally in weeks or maybe months create a foundational layer for finance to excel, adopt to AI technologies, and leave a legacy of growth for your company.
Yep. Absolutely.
Wow, that's pretty impactful as opposed to the CFO that leaves their organization on old dinosaur technology, as you called it earlier, Jurassic. I love that term, by the way. You don't want to be on Jurassic technology. Is there anything else that you're like, if I, could get on my soapbox and preach to the CFO and the finance community, what is the one thing that you just really want to get out to them?
Yeah, look, I think, we've talked a lot about kind of the challenges, the problems, the software technology out there, the stresses and strains, on the CFO. But I think the one area or one kind of topic thought I would kind of leave CFOs with is, if you have all of that information, real time information at your fingertips that you can access at any point in time during the day or night, just think about what you could do. Like, think about the business benefits, think about the ROI and the outcomes. So, in terms of revenue growth, right, potentially you can make pricing decisions made on current data, real time data, not last month's approximation. You could have profitability by customer, product, and geography visible in period. And then in terms of kind of risk reduction, again, right, you can have anomalies surfaced in real time, not at period end. And then in terms of operational efficiency, you could go from kind of closing from 2 weeks, 3 weeks to it actually being a non event. And if you were in that position, you'd then be able to walk into a board with current numbers, not last month's, right? Finance would essentially stop explaining the past and it would start shaping the future. So I think for me, focus on what you could achieve if you have those business outcomes and then go and find the software vendor that can help you support them.
I'm super excited. You probably saw me like getting excited as you were talking because what I've realized, and I just literally had this epiphany, is that when I have CFOs come to me for coaching and they're like, I feel like I'm not getting my voice heard. I'm feeling like my ideas aren't getting implemented. I feel like I have a seat at the table, but not a voice at the table. What you've just described is your technology and technologies like yours and having a finance ERP that is AI native is kind of the foundational layer to getting the voice at the table. Because until you have that data at your fingertips, it's going to be a challenge to have that voice at the table because you're always looking like disorganized or like you're having to run back. Wait, let me go get those numbers for you, right?
Exactly.
So, really, you're making CFO shine.
Yep. And enjoying it whilst we do it, right? I think, we're proving, as I probably have said too many times, right, that we can actually implement our system in 2 weeks, months, and seeing what these organizations can then do with that information and how it's making a difference is extremely rewarding. And it's great to be able to give the CFO and their team that voice to absolutely make a difference and a strategic difference and be able to contribute to enabling an organization to achieve transformative growth. It's, an exciting place to be at the moment.
Excellent. Well, we are just about time. This has been just a joy to talk to because I'm
Great.
really super excited about this for all CFOs out there that you've been struggling to get your voice heard and everything, and you don't know where you're going with AI. I think that Alex has just given us a really great place to start, and that's at the architectural and foundational layer. Now, Alex, before we part, any last parting words?
I think if any vendor tells you that it's going to take 18 months to do finance transformation, then you are looking at a Jurassic software product.
I love that. Thank you, Alex. It's been a pleasure having you today.
Thank you very much. Pleasure to be here.
Alex, thank you so much for joining us today. This has been such a powerful conversation. Wow, there's so many great nuggets in this episode with Alex Curran, CEO of Aptitude Software. One of the biggest takeaways that I wrote down is that AI success in finance does not start with another pilot. It starts with the foundation underneath it. If your data is delayed, disconnected, manually reconciled, or difficult to explain, AI will not magically solve that problem. It may simply expose the gaps faster. Alex gave us a different way to think about finance modernization. This does not necessarily mean ripping out your entire ERP and signing up for a massive multi-year migration. Aptitude Software is helping define the finance ERP category, giving organizations a way to decouple the finance layer, create a real-time and trusted accounting foundation, and connect with the systems they already rely on. That matters because the CFO role is changing. Finance leaders are no longer being asked to only close the books and report what already happened. They are being asked to help the business see around the corners, make faster decisions, manage risk, and act with confidence. So here's the question I would like to leave every finance leader with. If your CEO or board asks for a trusted, explainable view of the business performance right now, not at the end of the month, not days after manual reconciliations, and not after pulling data from 5 different systems and massaging it in spreadsheets, could your finance team answer the question with confidence? If the answer is no, it may not be your AI strategy. It may be the finance foundation underneath it. For CFOs under pressure to prove AI value, close faster, improve decision-making, and become a true co-pilot to the business, this is the conversation worth taking seriously. Thank you for joining us. I'm Heather Cole, Executive Advisor and host of the FEI Podcast. We'll see you next time.
Your career doesn't grow in isolation. It grows in rooms, relationships, and real conversations. So here's your next move. Expand your network through the FEI network because the right connections increase your net worth and your impact. Plug into the programs, the people, and the community, and keep showing up until opportunity recognizes your name.